And you can see there, page 1 of the Wall Street Journal. Yes, of course, the Greece story is right on top, but what's right below it? Morgan Stanley. Morgan Stanley was the driver on Facebook's wild IPO ride. What exactly does that mean that they were the driver? And Aprita Das is here to tell us about this one. It's amazing how much post-op we've been doing on this Facebook thing. I mean, it really tells you. And the fact of the matter is, as much as some people might complain about it, I mean, people really want to know what was going on with this IPO, which tells you how important this IPO really was. Let's talk about Morgan Stanley's role in this IPO. We all know they were the lead underwriter. How big a deal was that for them? What did they do right? What did they do wrong?
Yeah, I mean, just for the bragging rights, I mean, you know, this is potentially a career-making deal for Michael Grimes and his team. It is
Who leads
the
the
largest
team in California, right?
That's the team in Menlo Park. It's the tech banking team. Now, they've been very strong in IPOs for the past couple of years, you know, taking LinkedIn public, Zynga public. So they've been riding the crest of that tech IPO wave, and Facebook really was the crowning glory. So the campaigning to win that assignment, you know, started several years ago, and it really gained speed last year, and Goldman and Morgan Stanley were competing, you know, neck and neck. And then I think Morgan Stanley, you know, and that's what our story says, that he was able to convince Facebook that they should be the single underwriter because, you know, that way you have more control over a process and you're not running things by committee. And Facebook bought that argument. And so, you know, to the exclusion, to a large extent, of the two other underwriters. So
Goldman and
JP Morgan.
Right.
And JP Morgan did a bank financing deal, so, you know, they were also very much part of it. So, you know, and we saw that during two of the main decisions, you know, raising the price range of the IPO and then raising the size of the offering. That's really rare.
Right. Both of which happened the week before.
Right.
The IPO.
Right, and to,
the week of,
the week of, like
right.
leading up, you know, between the roadshow, which started on May 7th, and the IPO, which was on May 18th, you know, these two decisions. So they all, at the same time, you had Facebook's, you know, put out a statement and an updated filing saying that their, you know, revenue projections weren't looking that rosy. So, you know, you had these two conflicting things. I mean, in their defense, Morgan Stanley and Facebook say they were acting, you know, based on investor demand. And there is, as you know, as you said, there's a lot of hype around this IPO. You know, a lot of individual investors, you know, I use Facebook, I want a piece of its stock. You know, so there's a lot of, you know, hype for sure.
So now, Morgan Stanley, look, they wanted the glory, they wanted the money. They got it. They got the lead underwriter. They got the money. You get a bigger share of the IPO fees with that one. They got all that.
Right.
Now they're dealing with the fallout of those decisions you were talking about.
Yeah.
What is that fallout? How does this affect that California team? How does it affect Morgan Stanley?
Yeah, I mean, I think, you know, if you look at it, an underwriter is supposed to be a go-between between the client and the investors. You have to balance those two interests. In this case, you know, clearly Facebook made 16 billion, raised 16 billion in profits, you know, for proceeds from the IPO, and so they're really happy.
Right.
But, you know, I think the thing we're hearing in Silicon Valley is that, you know, whoever wants to go public next is going to think twice about having one bank control so much of the process. So, you know, we're hearing, you know, in pitches and bake-offs that people are saying if Morgan Stanley comes and asks us, beauty pageants, if you know, Morgan Stanley comes and asks to be the single driver of an IPO process, we're going to think twice about that and say, no, we'd like to have at least two banks. So I think there might be some fallout, but, you know, they have built their team over multiple years of, you know, doing mostly right. So I think it'll be a dent. It'll be, you know, and Facebook itself, I mean, the IPO was considered such a bellwether that we haven't seen, it's been a month now, we've seen no new IPOs. Kayak, you know.
Right, you've seen a lot of them put them on the shelf.
Right, exactly, and Greece isn't helping, so yeah.
Of course not. Let's take a quick look at Facebook's the stock. Pull the stock chart up, you can see there. Up at almost 31 now. I mean, you can see you know, it looks like a bowl, the line there. Steep drop. Last week it came back up, but as you were just pointing out, there have been no IPOs since Facebook's IPO. Right. How much of a chill did this put into the IPO market? What are the investment bankers saying? Are people starting to get a little bit concerned about that fact that we haven't had an IPO since?
I think they are. I think people who had planned to start their road shows, you know, around now have just said that, look, if we can hold out till the fall, let's do that. Because no one wants to be the first one out, because they feel that they'll end up pricing their shares at a discount, especially if you're in the consumer internet space. But, you know, you do have other companies like, you know, cloud-based startups that are valued on a completely different basis that have a different revenue model. So we know there are a couple of them on file, in fact, run by Morgan Stanley, and they should be coming up around now, but we just haven't seen those. And, I do think there is a general fear of the markets right now.
And like you pointed out, obviously Greece and Europe are not helping. And not helping anything in the capital markets.
Exactly.
That's an issue. All right, Anna
Yeah.
Prita Das, thank you very much.
Thank you.